Hey, Bernardo Wealth Extended Family. I've been getting the question a lot recently around asset allocation and like kind of your typical 60-40 portfolio as you start to retire. And really, what does that mean and how important is it? So let's just unpack that a little bit. I'll give you some comments and some thoughts. So 60% obviously stands for 60% of your portfolio in the stock market, 40% in the bond market. And generally speaking, when you add asset classes, right, stocks, bonds, cash, real estate, things like that, you start to bring down portfolio standard deviation or volatility or risk. So as we add other asset classes, think about, periods in time stocks are going up in value. It doesn't necessarily mean that bonds are going up in value, right? Bonds typically will be flat to down in periods of a rising stock market. And then vice versa. If we see a stock market coming down, you typically see a flight to quality or safety, and that ends up pushing the bond market higher. Does it happen every market cycle? Absolutely not. But typically that is the relationship you're looking for. So as you think about, going into retirement, adding more assets that bring down volatility to smooth out the ride of your portfolio is important, and that is the purpose. However, I do think it's okay if you retire with 100% in the stock market, given one very critical part, which is, can you stomach a very bad market and stay disciplined enough to not sell out of your portfolio? So think of it this way. If you have $1 million portfolio and the market sells off by 20% and you're all in stocks, your portfolio just went from $1 million to 800,000 in theory, right? So that's uncomfortable. Would you be sitting in a spot to say, I'm retired, I don't have income, I'm really relying on this portfolio? That would be very uncomfortable. So in theory, if we added bonds to that portfolio and limited that downside with adding some stable assets, you're likely not down near as much as the market. And so yes, it's still uncomfortable, but it smooths out that ride and helps you to feel a little more comfortable and confident. And so that's why we really believe in asset allocation. We want to plan through that to get that right, so that as you retire, emotionally you feel more stable and secure. And that, if you know how we like to think about things, to me, you really want to feel well about your money, financially well, financial wellness. I think that's super important as it relates to retirement, to have a fulfilling and positive retirement. So that's my thoughts. Happy to continue that conversation with you. Thanks for your time.